Analysts widely expect the Federal Reserve to increase interest rates for the ninth time in just about a year.
However, the banking turmoil we've all witnessed over the past few weeks appears to have altered the Fed strategy. The Federal Reserve is expected to announce a rate increase of 1/4 of a percentage point today. Now, this increase would come at a time when the labor market has been strong and inflation has cooled only just slightly in recent months.
Joining us now from the White House is Bharat Ramamurti. He is the Deputy Director for the National Economic Council. Good to have you with us. So let's start with the health of the banking sector, which everybody has been talking about over the last 2 weeks. We have seen these regional banks fail. But the actions by Treasury and larger banks in efforts to try and stabilize the markets appear to be working. Tell us, do you believe that we are past that turmoil, or is there potentially more trouble on the way?
Yeah, we can report today that the banking system is in quite stable condition. It's in much better condition now, thanks to the actions that were taken by the Biden administration several days ago. We've seen that deposits have stabilized at regional banks and at community banks as well. And so I don't want to diminish the possibility that there could be disruptions coming down the road, but Americans should feel highly confident that the money in the bank that they have is going to be there if they need it.
But Americans can only have that confidence because of government intervention, which then creates this suspicion that the banking system in general isn't as sound as it appears, and that regulators perhaps aren't being as stringent with making sure these banks can survive stress tests, for example, as we would like. So talk to us about how these issues have impacted the administration's approach and, of course, the budget as well.
Absolutely. So number one, the actions that the administration took did not put any taxpayer dollars at risk. The executives that ran these banks to the point that they had to be taken over by the government, they've been let go. The investors in these banks have been taking losses as appropriate in a capitalist system. When you take a risk and it doesn't work out, you take losses. So we believe that the intervention that we used protected depositors, it protected the stability of the system, but it made sure that those who are accountable are being held accountable for the mistakes that they made. Across the system, you're right that there has been a need for a higher supervision and regulation. In the previous administration, we saw a consistent effort to roll back the rules on exactly this category of banks, banks that are not the very, very biggest banks in the country, but just that tier below. And the president has made clear, as recently as on Monday when he made announcements on this, that he wants to see those rules reimposed so that we're not back in this position again.
Let's talk about inflation. Costs still remain above average in spite of the Federal Reserve's year-long efforts to bring them down. Obviously, the Fed's decisions to increase interest rates have also contributed to what we've been talking about with the instability of some of these banks. It's not merely some of those regulations. Tell us how the Biden administration plans to tackle inflation going forward in a way that helps struggling families, but also is honest about the problems with raising the interest rates and these balance sheets not working for banks.
Look, the Fed has a responsibility to maintain price stability and protect full employment. It's going to make the decisions that it's going to make. What the president has been clear about for more than a year now is that our top economic priority is helping bring costs down for families. And we've already done that in a number of ways. In fact, starting on January 1st of this year, for all those seniors out there on Medicare, the price of insulin is capped at $30 a month, when for years before that, many people were paying hundreds or even in some cases at more than $1,000 a month for insulin. We've also seen recent announcements following the president's advocacy that leading manufacturers of insulin are voluntarily capping the cost of insulin at $35 a month for everyone, regardless of age. And so we've made progress on that. We've brought down the cost of internet access through a new program that gives people a $30 a month discount off of high-speed internet costs. We've made progress on other prescription drugs where for the first time ever, the Medicare program is going to negotiate the cost of drugs. And year after year, the prices of drugs are going to come down, which saves taxpayers money and saves seniors money. So with the tools that we have been dedicated to bringing costs down for families, helping the Fed do its job. And the president's budget, which came out recently, proposes further actions that Congress could take that would bring costs down for families even more.
All right. Bharat Ramamurti, thank you so much for joining us.
Thank you.